Get ready to dive into the world of life and health insurance with exciting, beginner-friendly training that will give you the knowledge and confidence to succeed as a future agent.
This course is designed as a supplementary educational tool to help future agents better understand and absorb materials covered by qualified trainers in preparation for the California Life Insurance Licensing exam. This is not intended to substitute the required physical or pre-licensing course mandated by the California Department of Insurance. All participants must complete an official physical 2-hour course from a certified provider to meet the licensing requirements. This supplementary course serves only as an additional resource to reinforce learning and comprehension of the key topics in life and health insurance.
Session 1, General Insurance. Chapter 2, Contract Law. Slide 1. What is a contract? Terms to remember. Contract. A legally enforceable agreement between two or more parties. In insurance, the agreement between the insurer and the insured. Description. A contract is essentially a legally binding agreement between two or more parties, and this concept is key in the insurance industry. The insurance policy itself is a contract between the insurer and the insured, where both parties agree to certain terms. The insurer agrees to pay for covered losses in exchange for the premium, while the insured agrees to follow the policy conditions and pay the premium on time. As an agent, it's crucial to understand the legal framework behind these agreements, because you'll be explaining and managing these contracts on behalf of your clients. Slide 2. Elements of a valid contract. Terms to remember. Elements of a contract. 1. Agreement, offer and acceptance. 2. Consideration, exchange of value, premium for coverage. 3. Competent parties, legal capacity to enter a contract. 4. Legal purpose, must be lawful and not against public policy. Description. For a contract to be valid and legally enforceable, it must have 4 essential elements: agreement, consideration, competent parties, and a legal purpose. First, there must be an agreement between the insurer and the insured, typically through an offer and acceptance, such as the insurer offering coverage and the insured accepting it by paying the premium. Second, consideration refers to the exchange of value, where the insured provides payment and the insurer provides coverage. Third, competent parties means that both parties must have the legal capacity to enter into a contract. This excludes minors or those under the influence of drugs or alcohol. Lastly, the contract must have a legal purpose, meaning it must be in line with the law and public policy, such as covering insurable risks. Slide 3. Offer and acceptance. Terms to remember. Offer, the proposal made by one party. Applicant submits an application with initial premium. Acceptance. Insurer accepts the offer by issuing the policy. Counteroffer. If the insurer modifies the offer, it becomes a counteroffer. Description. The first key element of a contract is the offer and acceptance. In insurance, the offer is made when the applicant submits an application, along with the initial premium payment. The insurer can accept this offer by issuing a policy as requested. If the insurer doesn't accept the offer as is and instead offers different terms, like higher premiums or lower coverage, this becomes a counteroffer. The applicant must then accept or reject this new offer. Understanding the flow of offer and acceptance is essential when you help clients apply for insurance and navigate changes in their policies. Slide 4. Consideration. Terms to remember. Consideration. Something of value exchanged between parties. Insured's consideration. Payment of premiums. Insurer's consideration. Promise to pay for covered losses. Description. Consideration in insurance refers to the exchange of something valuable between the two parties. For the insured, the consideration is the payment of premiums. For the insurer, the consideration is the promise to pay for any covered losses or provide benefits under the policy. This exchange of value is what binds the contract. Without it, there is no legal agreement. As an agent, you'll explain this concept to clients when discussing premiums and what they receive in return: peace of mind and financial protection. Slide 5. Competent parties. Terms to remember. Competent parties. Both parties must be legally capable of entering into a contract. Excludes minors, mentally incapacitated individuals, or those under the influence of drugs or alcohol. Description. Competent parties mean that both the insurer and the insured must have the legal capacity to enter into a binding agreement. Generally, this excludes minors, people who are mentally incapacitated, or individuals who are under the influence of drugs or alcohol at the time of contract formation. This ensures that both parties fully understand their obligations and rights under the contract. As an agent, it's your responsibility to make sure your clients meet this criterion before they sign any insurance agreements. Slide 6. Legal purpose. Terms to remember. Legal purpose. The contract must serve a lawful purpose and not go against public policy. Insurance application. Insuring illegal activities or wagering contracts are not enforceable. Description. The fourth and final requirement for a valid contract is that it must have a legal purpose. In the context of insurance, this means that the contract must be for a lawful reason. You cannot, for example, insure an illegal activity or create a wagering contract. These would be void and unenforceable. The legal purpose in insurance is to provide financial protection for the insured or their beneficiaries in the event of a loss, which is considered a legitimate and lawful reason. This principle helps ensure that insurance is used for its intended purpose, providing peace of mind and security, rather than as a way to profit from illegal activities. Slide 7. Contract of adhesion. Terms to remember. Contract of adhesion. A contract prepared by one party, the insurer, and accepted or rejected by the other, the insured. Ambiguities. Any ambiguity in the contract is resolved in favor of the insured. Description. Insurance contracts are often referred to as contracts of adhesion, which means they are prepared by the insurer with little or no negotiation from the insured. The insured must accept or reject the terms as they are presented. Because the insurer is the party drafting the contract, any ambiguities or unclear terms in the policy will generally be interpreted in favor of the insured. This protects the insured from being taken advantage of due to any unclear or confusing language in the contract. It's your job as an agent to make sure your clients fully understand what they're agreeing to and to clarify any terms they might find confusing. Slide 8. Aleatory contracts. Terms to remember. Aleatory contract. A contract where the exchange of value is unequal. Example. Small premium for potentially large payout in the event of a claim. Description. Insurance contracts are considered aleatory, which means that the exchange of value between the two parties is unequal. The insured may pay a relatively small premium compared to the potentially large payout they could receive in the event of a covered loss. For example, a client may pay a few $100s in premiums each year, but if they file a claim, the insurer could pay out tens of thousands of dollars in benefits. This unequal exchange is a fundamental characteristic of insurance, where the payout depends on chance or an uncertain event. Slide 9. Unilateral contracts. Terms to remember. Unilateral contract. Only one party, the insurer, is legally bound to fulfill the contract. Example. The insurer must pay claims, while the insured is not legally required to continue paying premiums. Description. An insurance contract is unilateral, meaning that only one party, usually the insurer, is legally bound to perform under the contract. The insured is not legally obligated to continue paying premiums, but if they stop, the insurer has the right to cancel the policy. However, as long as the insured continues paying their premiums, the insurer is legally required to fulfill its promises, such as paying claims. This creates a binding obligation on the insurer to provide the coverage as long as the insured meets their end of the agreement. Slide 10. Conditional contracts. Terms to remember. Conditional contract. Certain conditions must be met for the contract to be enforceable. Example: the insured must pay premiums and file a claim according to policy terms. Description: insurance contracts are conditional, meaning that both parties must meet certain conditions for the contract to remain enforceable. For instance, the insured must pay premiums on time and follow the policy's procedures when filing a claim. If these conditions aren't met, the insurer may not be obligated to pay a claim. This is why it's important to ensure that clients understand their responsibilities under the policy and what's required to maintain their coverage. By explaining these conditions, you help set clear expectations and avoid misunderstandings when claims are filed. Slide 11. Warranties, representation, and misrepresentation. Terms to remember. Warranties. Statements that are guaranteed to be true and must be upheld by both parties in an insurance contract. Representation. Statements made by the applicant that are believed to be true to the best of their knowledge. Misrepresentation. A false statement made by the applicant that, if intentional, can void the contract. Description. In an insurance contract, warranties are statements that are guaranteed to be true and must be upheld by both the insured and the insurer. Failure to uphold a warranty can result in the contract being voided. Representation refers to statements made by the applicant that they believe to be true to the best of their knowledge at the time of the application. Unlike warranties, representations allow for some flexibility if they are made in good faith. However, misrepresentation occurs when an applicant provides false information, either intentionally or unintentionally. If misrepresentation is found to be intentional, it can lead to the voiding of the insurance contract. As agents, it's important to help clients understand the difference between these terms to ensure they provide accurate information during the application process and avoid potential issues with their coverage. Slide 12. Concealment, terms to remember. Concealment, withholding of information that is material to the contract. Effect, can lead to denial of claims or voiding of the contract. Description, concealment occurs when one party withholds material information that could affect the insurer's decision to issue coverage. If a client fails to disclose important details, such as a pre-existing health condition, the insurer may deny a claim or even void the contract altogether. As an agent, it's your duty to ensure clients fully disclose any relevant information when applying for coverage. Encouraging honesty and transparency will prevent issues later on and protect both your client and the insurer from disputes. Slide 13. Fraud. Terms to remember. Fraud. Intentional deception for personal gain. Effect, can void the contract and lead to legal consequences. Description, fraud in insurance involves intentionally deceiving the insurer for financial gain. This could include submitting false claims or providing false information on an application. If fraud is detected, the insurer has the right to void the contract, refuse to pay claims, and pursue legal action against the insured. As an agent, part of your role is to ensure clients provide accurate information and understand the serious consequences of fraudulent behavior. Protecting both the insurer and the client from fraud is essential for maintaining trust and integrity in the insurance process. This concludes Chapter 2, Contract Law of Session 1, General Insurance. Coming next, Session 1, General Insurance. Chapter 3, the Insurance Marketplace.
Great job! Great job completing this session. You're building a strong foundation, and the next chapter will take you even deeper into the essential skills you need to master. Let's keep momentum going, jump into the next session, and continue your journey to becoming a top-notch life and health insurance agent.